This is question number 3 on the quiz 3 for module 3. So this question is basically asking us to get the return on net operating asset and decompose this into the NOPM and NOAT. So this is sort of a standard exercise, but what's not so standard is this information provided. Generally, we're provided with a complete balance sheet and complete income statement. From there, we just need to um, identify which of the items on those two statements are operating related and which are not operating related. But in this case, actually the information, you can see that we don't have to do that part of the job because the average operating assets and average operating liabilities are already provided. So from that, we can calculate the average net operating assets, which is basically the difference, right? The difference between these two for each of these two competitors, two companies here. So we have basically the denominator in order to calculate the return on net operating assets available. What's not available is the numerator. Numerator is NOPAT, right? Net operating profit after tax. So that's not directly available because the complete income statement is not available here. And what's particular about this question is that actually it's not only the complete income statement is not available, it's also that some piece of the income statement is available, but we have to sort of work backward in order to sort of complete the income statement, and then from there we can figure out the NOPAT. So I'll show you what I mean when we actually do the calculation. So to do that, again, let's first read the rounding requirement. That's the thing I want you to pay particular attention to. So refer to the following 2018 financial data for the two companies, and then compute return on net operating assets, and disaggregate this into and add. Do not round until your final answer. Round answers to the two decimal places. All right. So now I want to copy the table to my Excel sheet to speed up the calculations. So now I have this table available in my spreadsheet. And as I said, first, I guess what we can calculate is the average net operating assets, which is basically the average operating assets minus the average operating liabilities. So this is available very easily. And what's not available is the NOPAT, the net operating profit after tax. And we know that NOPAT equals NOPBT, right, minus tax on operating profit. And tax on operating profit further equals tax expense plus pre-tax non-operating expense times statutory tax rate. All right, so that's the formula we need to use in order to figure out this NOPAT. And so you can see that NOPBT generally that's the operating income. So operating income basically is the revenue minus the operating expense, right? So that seems not directly available because there's no item called operating expense. But what's provided is a net income. So I guess the trick to work out this problem is to look at all the items which belong to the income statement. So basically, this is the revenue and pre-tax net non-operating expense. Basically, that's this part which is directly available, and also net income. And marginal tax rate, we can probably use that to figure out some numbers. And return on equity, we don't, this is directly a ratio. So basically, let me mark the items which are from the income statement in red. The reason I want to do that is because I want to use this information. So I count marginal tax rate also as part of the income statement because that can help me to calculate taxes and other related items. So, and as I said, our goal here is to use the available numbers to figure out the numbers that we need in order to complete the income statement. So we know that, well, typically we have the revenue, right? The revenue is the revenue for income statement. So let me write this at income statement. So we start from revenue, and then we have the operating expense. So the difference between them becomes EBIT. So operating expense, when I say operating expense, this actually here also include the cost of goods sold, right? So that's why this difference becomes EBIT. So, and we probably, in this course, we mainly write EBIT as operating income. So let me also write that as operating income. And PBT generally is operating income. And then we subtract interest, we subtract actually the pre-tax net non-operating expense, and that will give us the taxable income. And then we further subtract taxes from that, and then we get the net income. So that's basically the general structure of a income statement, right? That's the general structure of an income statement. So now let's check which piece of these items is available and which piece of this income statement is not available. So revenue here is available, right? Revenue here is available. Let me mark that in red. And pre-tax net non-operating expense is available. And net income is available. These three basically are available. So marginal tax rate is also available. And from that, we can actually calculate the taxes, right? We can also calculate the taxable income. Why? Because remember, the relationship between net income and taxable income is what? Net income equals taxable income minus taxes, right? And taxes further equals what? Equals taxable income times statutory. Actually, it's the marginal, right? Marginal. But in this case, I don't think that that matters. You can see that there's no mentioning of the statutory tax rate, so we can safely assume that the marginal tax rate is the same as the statutory tax rate. So that doesn't make any difference here. So it's going to be marginal tax rate, and you can see that both has taxable income, so we can combine the terms. So this equals taxable income times 1 minus tax rate. So let me just use the tax rate. Yeah, so this without causing any confusions, because there's only one tax rate here, so just use the tax rate. Okay. So taxable income times 1 minus tax rate. So tax rate is available and net income is available, so we can actually figure out taxable income. So taxable income, now we could taxable, let me copy the numbers, right? Let me copy the numbers. And so copy the numbers here. Revenue, that's the revenue, and pre-tax net non-operating expense is also copied here. And net income is copied here. So taxable income, now we could use that equals net income divided by, right? Divided by 1 minus tax rate. So then we can use this formula to figure out the taxable income. So taxable income equals net income divided by 1 minus the tax rate, right? Tax rate is right here. So, and then we can just pull the cell to the other side, to the right, and that will automatically calculate the taxable income for the other firm. And then taxes, now with the taxable income and net income, we can easily get taxes, right? Taxes is just the taxable income minus net income. And then you can pull the cell to the right to figure out the taxes for the other firm. So now let's continue to back up the other items on the income statement. So now operating income, right? Operating income minus pre-tax net non-operating expense equals taxable income. So now with the taxable income available and pre-tax net non-operating expense available, we can also easily get this operating income, which is the sum of these two numbers, right? Pre-tax net non-operating expense and the taxable income. And then we can also further back up the other firm, the number for the other firm. And operating expense, I don't think we need that information, even though I think by now we should be able to figure out operating expense very easily by simply subtracting operating income from revenue, and we can get that number very easily. But we don't need that number actually in order to for the calculation. So I leave the number as it is. And now we can calculate NOPBT, right? NOPBT is simply operating income here. So let me write this here. So NOPBT, this is simply the operating income for both companies. So let me pull the cell. So now taxes is available and pre-tax net non-operating expense are available. So we can use this formula, right? Tax on operating profit, because NOPAT is NOPBT. NOPBT is operating income here, minus tax on operating profit. And the tax on operating profit further equals tax expense plus pre-tax non-operating expense times statutory tax rate. So we can just use this NOPAT, use this formula to figure out NOPAT. So this equals NOPBT and then minus tax on operating profit. And the tax on operating profit equals tax expense, it's right here, plus, right, plus pre-tax net non-operating expense, and then times the tax rate. Tax rate is right here. So that's basically my NOPAT. And then we can further pull the cell to the other side, to another company, and then that we can figure out NOPAT. Okay, so I guess we should be fine with this NOPAT. So namely, now we can calculate the return on net operating asset, right? Basically, that's NOPAT divided by average RNOA. So then pay attention to the rounding requirement and also notice RNOA for both companies are in percentage terms. So, and also round answers to 2 decimal places. So that means I need to change the format here to in percentage terms and keep 2 decimal places. And also move the cursor to the other side to get the same number for the other company. And so now we can calculate, we can copy the number back, 11.47%, and 4.62% for the other company. And NOPM can be easily calculated as well, right? Net operating profit margin. So this is defined to be NOPAT divided by sales. Again, this is quoted in percentage terms, so we just change the format to be in percentage and keep two decimal places, and then move the cell, move the to the other cell. So 10.12%, and this is 8.74%. And finally, NOAT, net operating asset turnover. So this is defined to be revenue divided by the average level of the net operating asset. And this is not in percentage term, but in numbers, and still keep two decimal places. So just like this. And then I can directly copy the number back and copy the number back. So now I can check my answer. So they are correct. So I guess we're done with this question.